Hello and welcome back to the channel. You know, there's a common phrase in property investing circles: don't wait to buy property and then wait. And it sounds simple, almost cliche, but when you unpack it, there's a powerful truth hidden inside. Every week I speak to people sitting on cash. Some have been waiting 6 months, others 2 years or more. They're watching the headlines, listening to the news, following interest rate updates, waiting for signs. Some kind of signal that it's now safe to invest. They're hoping for the perfect moment, and while they wait, something is happening quietly in the background. Their money is losing value. Opportunities are passing by. Competitors or even people with less capital but more conviction are gaining ground. The habit of waiting for perfect timing feels rational, it feels responsible, but it can be incredibly expensive. Inflation is like a slow leak in your financial boat. You might not notice the impact straight away, but over time it quietly eats away at your position. Sit still for too long and you find yourself underwater. Not because of any sudden event, but because value has gradually been slipping away. It's steady, it's silent, and it catches most people off guard. If you've got £100,000 in the bank and inflation is running at 5%, then in real terms you lose £5,000 of buying power that year. Not a hypothetical cost, it's a real one. That's £5,000 that no longer stretches as far, and because inflation compounds, it doesn't just stop at year one. Leave that same cash untouched for 5 years with inflation averaging around 4 to 5%, and you're effectively losing over £20,000 in purchasing power. Now, people will often say, yes, but at least I haven't lost money in a risky investment. And that's true on paper, but they've lost something more subtle: opportunity. They've lost the chance to leverage assets, to create cash flow, to benefit from appreciation, from tax advantages, and crucially from momentum. Meanwhile, those who acted even imperfectly are now ahead. And maybe their first deal wasn't amazing, maybe it wasn't timed perfectly, but now they've got experience, now they've got income, now they've got equity, they've got a track record, and that gives them more options, not fewer. Waiting doesn't preserve opportunity, it often eliminates it. And let's bring this into property. Imagine two investors, and investor A is sitting on 100k. They've been watching the market. They're not sure what interest rates are going to do, so they decide to wait for clarity. Now, on the other hand, investor B has the same £100,000, but instead of waiting, they take action. They find a strong multi-unit freehold block opportunity and use 80k of that cash to cover the deposit and purchasing costs. They still keep 20k aside as a safety buffer because smart investors always build in a contingency. That 80k lets them acquire a block that brings in around about £1,200 net a month. The deal doesn't blow the doors off, but it cash flows, it's in a growth area, and it gives them leverage to go on again over the coming months. Now, fast forward 2 years. Investor A is still sitting on their cash. Maybe they made 3% in a savings account if they're lucky. And meanwhile, investor B has collected over £28,000 in rental income, benefited from asset growth, and can now release equity through a refinance to buy again. Who's ahead? Investor A might say, well, I avoided the risk, but investor B didn't take reckless risk. They took calculated risk and they got paid for it. And that's the key difference. It's deliberate action versus indefinite hesitation. People worry about buying at the top, but in real estate, you don't need to time the peak or the trough. You just need to buy well, buy right, and buy with a long-term perspective. If your deal works at today's interest rates, today's rents, and today's refurb costs, and you've factored in contingencies, then why wait? The trap of market timing is that it feels intelligent, but the data tells a different story. Over decades, investors who simply stayed invested outperformed those who tried to time the market almost across the board, because the biggest gains often come in unpredictable spurts. Miss just a few key months and your long-term returns are significantly lower. Let's talk about emotional timing now, because the human brain is not wired for investing, it's wired for survival. It wants certainty and it wants to avoid loss. And that's why so many people freeze when conditions feel unstable. But real success lies in moving forward despite discomfort, not waiting until the discomfort disappears. If you're always looking for perfect clarity, you'll never act. And by the time you do, you'll be paying more, borrowing at higher rates and competing with people who moved before you. It's the same in business. Entrepreneurs sit on new product ideas or expansion plans, waiting until things calm down. Then someone else brings that idea to the market, builds the client base, captures the attention, and now they're playing catch up. Timing feels strategic, but it's often just procrastination in disguise. And look at what inflation really does. It doesn't just erode cash, it inflates asset prices, it pushes up bill costs, it drives up contractor day rates, insurance premiums, council tax, legal fees, the lot. So if the market cools slightly, you may not actually be better off. If refurb costs rise by 15% and purchase prices fall by 5%, have you really won by waiting? Or have you just made the same deal but later and with more stress and costs? The other factor is learning. Every deal teaches you something. Every project makes the next one easier. When you're sitting on the sidelines, you're not just losing time, you're missing those reps. And without reps, you don't grow. You can't build experience from theory. You need to be in the game. Now, someone might say, yes, but what if I act and it goes wrong? Well, that's a fair question, but here's the thing. Waiting doesn't guarantee safety. It just postpones risk. And when you wait too long, the risk often increases because now you're under pressure. Now you have to make something work. You're chasing the market, not shaping it. Acting early, even in small ways, gives you room to course correct. If you do one deal this year and it performs moderately, you still have time and headspace to reflect, adjust, and improve. But if you wait 5 years hoping for the perfect storm and then jump in late, you've used up all your runway. That's why the people who build real wealth aren't obsessed with perfection. They're obsessed with progress. They know that deploying capital productively is better than hoarding it reactively. They look at every pound and ask, is this working for me? Not, is it protected from risk? But, is it productive? And that mindset shift is what separates those who build real momentum from those who stay stuck. Now, let's be clear, I'm not saying deploy capital recklessly. This isn't about you only live once investing. This is about making intentional, well-informed moves based on data, knowledge, experience, and strategy. It's about understanding your risk profile, stress testing your numbers, and getting professional input where needed. But once those foundations are in place, act. Because doing nothing is not a natural position. It has a cost, often a bigger cost than doing something imperfectly, but intentionally. So let me ask you plainly, are you waiting because you've run the numbers and the deals don't stack right now? Or are you waiting because you're uncomfortable and hoping that discomfort will somehow vanish with time? Because discomfort doesn't go away. The market doesn't send you an email saying, hey, it's safe now to invest. You have to learn to move in spite of it. And that's where the real growth happens. Inflation doesn't care about your comfort zone. It doesn't pause while you decide. It keeps ticking, taking bites out of your buying power month after month. So don't sit on capital too long. Don't tell yourself you're being smart by doing nothing. Get clear on your strategy, understand your numbers, build your team, and then move. Even small, strategic moves today can lead to disproportionate gains over the next 3, 5, or even 10 years. Because ultimately, you don't win the game by being the best at predicting. You win by being the best at preparing and at acting when others are still hesitating. That's all for this video, and as always, thank you for watching. I appreciate you for being a subscriber, and I will see you again on the next one.